Tomas, we are back, my friend. So enough out of you. We've got this man. This man's with us, Ryan, in Crypto Conversations. How are you, brother?
I'm doing well, Tony. How are you?
I'm doing good. Thank you for coming on the show, helping us with Mr. Tom. So look at the smile on his face. What a little Vicodin could do for you. Woof.
I wish I had Vicodin. I need something. I got nothing.
Nothing.
I got garbage. I don't have any of the good stuff. They didn't give it to me. They don't trust you anymore.
How are you feeling, Tom? How you doing?
On air, I'm perfect.
Awesome.
If I don't ever have to move from this seat, I'm good.
Well, it's good to see you guys. Like I was saying, a bit disappointed we're not in person, but maybe next week we'll get back in the studio.
Oh yeah. I got screenshots last night of the new studios. Dr. Data went in there and did a live stream for us and during our pitch, and so looking good.
Awesome.
Nice.
It's closed off, right? No one from the other side's allowed to come over. You guys are safe over there.
You're one of those crossover players.
Oh, wonderful.
You actually will have the very hard to get, if not impossible, key card. Like even Scott will not have a key card to get into the broadcast space. But you will be one of those rare few, Ryan, that will be able to, have a special secret. You'll be a card to hold. You'll be an official member.
Go both ways.
Yeah.
Well, let's jump into the show, guys. It's good to see you.
Good to see you.
I have a topic that, I don't know, might be of interest. I thought this was something to dig into, given the kind of the apathetic state of crypto at the moment. So we'll see. This might just be snake oil in terms of what we're going to look at here. You do see this analysis and some of this play out at times in other markets. There happens to be a little bit of a seasonal component to Bitcoin prices. We don't have a ton of data, but it's been around the longest. So if you go back over the last 13 years, it does very well at different points in time during the year and not so well during others. So I want to talk about that a little bit here with you guys on the show today.
I like it. Let's do it.
All right. So we can pretty much skip over this slide. Quick update for people. I mean, if you're looking for the trading range based on the implied move here with vol, you're still looking at about $1,500. Let's just say, on the downside, what's being priced in is 26 and 29 to the upside. But we've really been trading sideways. Nothing has much changed in this environment. That said, with the kind of lack of performance or underperformance here in terms of equities in the market, crypto's done pretty well over the last month. If we just jump to the next slide, this is something where it really has shown little to no correlation. Correlation is like spot 2-1, and it's up 13.5% on a relative basis when you look at Bitcoin specifically versus the S&P over the last month. It's done very, very well. Year to date, as many assets are still up year to date, but Bitcoin, I think maybe when you look at the data, surprisingly, has really outperformed regardless of the headlines and kind of the perspective at times that there is. So that said, I want to jump into this idea of Bitcoin seasonality. And what I want to look at today is specifically how Bitcoin performs during different periods over the year. So we're going to look at what percentage of the time returns are positive each month. Look at what those average monthly returns are, kind of look at that setup going into year end. And given that we have record low volatility right now, are there any potential trades? Or I'm really curious too, how you guys think about structuring a trade, if there is one, because you do face some kind of liquidity constraints when you look at options on some of the equities that trade or on the Bitcoin ETF. There's obviously the way to get long is just via the spot, but curious as to how you guys might think about a low volatility environment where there is potential upside, and there's also the potential for, obviously that expansion of vol on the upside.
Well, I'm not a seasonality person, so I'm way more focused on price. I actually couldn't care less about seasonality. I don't even know what that means really with respect to, digital
almost
assets.
Anything, not even Bitcoin, right?
Yeah, I don't know what that means with respect to digital assets or anything else, Ryan. So, and I don't really care about what percent of the times returns are positive, because the thing with So here's the plus and minus to digital assets for me. right now. The plus is that I'm fascinated by the technology, and I think I'm fascinated by technology. I think it has more upside than, to me, it has more upside than AI. And because AI is fully priced in Bitcoin, I don't believe is. And I think there is, and so I'm really interested as it relates to digital assets as a technology play. The negative is that there's very few ways to play it using derivatives other than Coinbase. The cash markets are fine, but they're dead money. And I hate dead money. You know, like everything we do in a leverage capacity, and Bitcoin and digital assets are dead money. So they're not leveraged. So they're very uninteresting in that regard. Because the money just goes and sits there and dies, you know, so it has to have some return. So I don't think we look at it as far as monthly returns go. I don't look at it setting up into year end either. I don't think about things that way. The fact that it's a low vol trade, you know, if you're doing a passive investment, which Bitcoin is passive now, I don't think that matters. Personally, I think we would all like to write calls against, I think Bitcoin would be way more interesting if we could write calls against, you know, all digital assets and it was a liquid marketplace and we could roll calls and do things like that. I think we'd all be more interested. And if there was obviously leverage on the underlying, I think the technology is the bright spot. I think the asymmetrical opportunity, the upside is the bright spot. I think the technology is fascinating and it's underutilized and it's the bright spot. And I also think there is a binary component there's a risk-off binary component to the regulators that is going to be a massive upside breakout when it happens. So I think all of those things, which is effectively like a takeover, are huge in the favor of digital assets. I think the downside is there's very few ways to play it that are interesting because it's dead money. And if you're not playing Coinbase, there's not much there.
Yeah, I kind of figured that you probably weren't too keen on the seasonality piece, but I think if you do look at this objectively, it's kind of interesting. I mean, there are observable trends, which over the last 13 years, I mean, they seem real. So I get where you're coming from, and it is unfortunate there's not a lot of ways to play it, but I think that this dead money can come alive pretty quickly, and that's what's exciting about it, where, yes,
well, sure. I mean, look, it's a $1 trillion, it's a plus $1 trillion marketplace, and the dead money came alive in 2 seconds the last time around. So yeah, of course.
Right. Which, I mean, I think to me, then there's a strong argument around you need to be in it regardless. And sure, you're giving up opportunities elsewhere, but you have to be in it, right, in order to get that 20% to the upside in 2 to 3 days, which you can get once in a while in other names, surely. But this is what consistently plays out in crypto, where it explodes to the upside. Your risk is, I think, being short in this more than anything when you look at just kind of the asymmetric returns, like you said. But I agree with you. This is not, you know, I'm not saying that, hey, because we saw this happen over, 13 occurrences, it's valid. Obviously, that could change, and the next 13 occurrences could be much different. But when you just look at what percentage of the time over the last 13 years on a monthly basis do we see, positive months? February tends to be where you see this kind of outperformance. Into the spring, you tend to have these kind of bullish periods. And as I think you see in equities as well, the fall, for whatever reason, sometimes has a lot of volatility, and that volatility is to the downside. So what I think is interesting about this is, given kind of the direction we might be going in from an economic standpoint, kind of the things that are happening on the political front, just the way that markets are kind of trading right now, when we look at that relative performance again, Bitcoin has held up during what is historically one of the worst periods for Bitcoin on record. Typically in August and September, we see this underperformance. Only 38% of the time September was positive, but we've had a positive September, and maybe that leads to kind of further outperformance, if anyone kind of believes in that. But that's where we are in terms of what percentage of the time Bitcoin performance is positive over a monthly basis. But I want to look at what those average and median returns are if we jump to the next slide, just to get a sense of what could happen, maybe, or what's happened in the past, which is interesting to me. November and into the end of the year tends to be a bullish period. November tends to be the best month in terms of average performance, where on average it's up 36%. And the biggest month that we've seen in terms of Bitcoin performance historically has also been November. That was in 13, went up 470%. Not saying it's going to do anything like that. Obviously, these are, off of much lower prices in terms of your percentage returns, but November tends to be a good time. October also tends to be a decent time where the average return has been 25%. The medians obviously are going to be a little bit lower than that, but still pretty decent returns for this asset going into the fall, coming out of what is.
How long do these go back for?
This goes back to 2010. So the last 13
but I mean,
years.
it's essentially, yeah, that's okay.
For sure. But I think, if it is.
How long can you go back with crypto, Saad? I mean,
No. It's just, my point is, it's just been, it's been a runaway train. I mean, there hasn't been very many down moves in crypto.
Yeah. I mean, you get the 80% drawdown and then the 300% move to the upside, which I think is fine. And it's a lot of fun. You just have to watch out for those 80% drawdowns. But, that's obviously how it's performed in the past. Maybe it won't do that in the future. So this is the stage. And if we jump to the next slide, there's maybe nothing to this, but just observably, September is usually the worst month for Bitcoin. But when you have a positive September and when you have positive year-to-date performance going into September, generally it's been a decent year for crypto, 70% of the time you hold on to those gains going into the end of the year. Maybe something happens, obviously anything could happen, and this might not be the case for 2023. But when you look at how that fourth quarter ends up playing out or how it has in the past, the median performance is 28%, and that average performance for the fourth quarter, when you have the setup that we have right now that you look at historically, is 45%. So maybe there's something there, or maybe it absolutely collapses. But I do think it's interesting that we have over the last month, and really when you look at other asset classes, specifically what's going on with rates and the U.S. dollar, that's been a headwind for crypto. Though we've seen that rally in the dollar, certainly seen that rally in rates in terms of yields, and crypto has held up. So maybe it is really starting to decouple from a lot of the variables or the factors that have driven performance. I don't fully believe that.
It's just losing its volatility too. Like, I mean, it could be.
Yeah. You know what, Ryan, too? I kind of feel like in the crypto space, because it's kind of like a passive investment, I would figure fourth quarter would be strong because people, you don't want, it's been strong this year. You don't want to pay taxes. So
Yeah.
You're going to hold those gains. And if you're going to liquidate anything, it won't be till next year. It doesn't make any sense to liquidate crypto now for tax purposes. I don't think in Q4, it's been strong all year. It's had a good performance. It's passive anyway. Why wouldn't you just hold it?
Yeah, I absolutely agree. I think there's, for tax law selling, you could certainly look elsewhere relative to Bitcoin. Do you think that then is the primary driver? I mean, if you see the same thing in equities, because I get that we're not looking at this and saying, hey, this is something where there's a concrete trade that has to be made because of what we've observed historically. But I did want to get you guys' thoughts on what do you think is behind this, if in fact it's real? Is it just what you described, that dynamic of harvesting for taxes?
You're talking about fourth quarter?
Yeah.
Yeah, I do think so digital assets to me are not, they're a very strange asset class because we've essentially, for regulatory purposes, for tax, for lots of reasons, we've had to discourage customers from trading Bitcoin, digital assets, all the altcoins, everything. So for that reason, I do think they're a very static asset class, and with no leverage, it doesn't make any sense to liquidate from September to the end of the year unless you need tax losses. If Bitcoin was lower, and it's not, it's higher. So unless you need gains. I wouldn't take profits. I'm up money in 2023. I'm not selling out Bitcoin for taking a tax hit on it because it's passive anyway,
For sure.
And I don't ever want to lose that. I don't ever want to lose that. That's kind of I think you always got to be long at one of those things.
Yeah, absolutely. So you get that 400% up move in November. Ride that wave, Tom. It's coming soon.
Yeah, I don't look at Bitcoin as I don't look at digital assets anymore the same way I did before. I look at them now as just I don't really carry a very big passive portfolio, but I do have some things I just hold forever. I kind of look at it like that. And until it's tradable, I mean, I do want to get back into Coinbase, and I got my positions off in there. And I always like being short puts in Coinbase. I'm never going to be short calls again. And so I'm looking for an opportunity to jump back in.
Earnings November 2nd, Coinbase's stock's up 30 cents this morning. Ivy rank at 22.
Yeah, the Ivy rank's not great. I mean, I should do something in Coinbase just to put a position on, like sell some 60 puts or 55 puts, just have something on in there because I like having stuff on in there.
Well, if we were can we jump into Coinbase? I don't have the ability to pull it up on my screen here. But...
All right, I sold some puts in Coinbase just for the hell of it, just because of our conversation.
Awesome. Yeah, I was trying to put some trades together earlier, and as you mentioned, right, and there's no way to disagree with any of the facts that you stated around how these markets are trading. You do have options on the futures ETF. I don't like, obviously, the construction of the ETF, given the contango.
I think they're kind of hard because we haven't.
It's not liquid.
Yeah, we haven't done very well in any of that stuff. I feel like Coinbase is the only way to play digital assets right now in a liquid marketplace. Plus, I also think it's an extremely interesting company. I've been singing their praises because I'm impressed with how they've handled their business. I'm not impressed by too many companies. I'm impressed by those guys.
Yeah, they've done a really nice job. When you go in there, so you've got low vol. Obviously, it's not as low in Coinbase in terms of the IV rank as it is when we look at something like Bitcoin, which the IV rank in there is about 7 or so. Still comfortable where you would, in terms of structuring the trade, you want to sell those puts at these levels where you maybe own the stock if it got down there?
I don't care about owning the stock.
Okay.
We don't sell puts to own stock. We sell puts to sell puts.
To make money.
Yeah. I hate the idea of selling puts to own the stock. I did this article that some reporter asked me about a strategy. I think it was Business Insider or something. So I was giving her some insight into, selling puts. And I'm like, she's like, well, why wouldn't we just do covered stock? I was just more capital efficient. That's it. If you want a beginner strategy, just sell puts instead of, it's the same thing. It's just more capital efficient. So of course they have to go out and find some other guy to say, well, it's really risky to sell puts. And I'm like, dude, I just said, I gave you the whole thing. Buy stocks, sell calls, sell puts, same exact thing. What are we talking about?
Gotcha.
Why do we have to make this way more complicated than it is?
Well, I guess let me rephrase that then. If you're just let's say, vol is relatively cheap in here on a historical basis, and maybe it gets cheaper, right? But when you look at that downside, are you just focused on the probability, or is it just a strike where you don't think the price is going to get there?
Yeah, you just go to. It depends. So for me, you sell puts when I like to sell puts when I feel stocks are cheap. And at $73, I don't think Coinbase is cheap. At $50, I think Coinbase is cheap. So I get very aggressive in there, between 120, when it gets under 60 or 50, in that range, I get very aggressive in Coinbase. When it's at $73, I'm not aggressive. I mean, I'm like, okay, I'll just wait and see what happens. And then, so I'll sell some puts down around the 50, 55 level where I think it might go to anyway. But, I just think it's important sometimes to keep very small positions in underlyings that you're interested in, in just watching. It's more of an engagement tool. I didn't just sell puts in there to really, thinking I'm going to make a lot of money on them. That's for sure.
Cool. Well, we'll see what happens as we head into the end of the year here, and see what happens with Coinbase earnings that are upcoming in a little bit.
Yeah, I just think there's, in the business we're in, you have to be, you have to be very multidimensional. And, one of the challenges for you, which is a real challenge is, when you're focusing on just digital assets, how do you bring that product indifference story into the digital asset, which is why what your role is in building the wallet and everything else you can do there, all the other pieces to me are so much more important. What are all the other things we can do with that?
Yeah. We got to launch the Tom NFT, and we've got the token coming soon. So there will be many ways to speculate in digital assets with us.
I like it. Thank you, my friend. We're going to take a quick 90-second break and come back. We got a market measure next. Let's Tasty Live.